Hi everyone. So thank you for taking the time to join us or watch this first of many webinars that we'll be putting out here from Exec Advisors, which will be labeling as tea time. So I'll through these webinar series, we'll be having a discussion around different key topics that we're seeing across industries with our leadership partners, and understanding how they help clients, and also some of the key questions or burning questions that are in those sort of areas that we're seeing at the moment. And hopefully you'll all get some value from watching this. So with that being said, I'll hand over to you, Dave. It'd be good to get a bit of an introduction from yourself as a leadership partner here at Exec Advisors, and maybe a brief snippet into what we're going to be having a talk about today.
Great, thanks a lot, Chris. Yeah, hi, I'm Dave Owen. I'm the a leadership partner for Exec Advisors. I said good morning. I think it would probably be afternoon by the time you watch this, if it's a tea time sort of thing. So I'm a consultant and executive advisor with over 30 years experience, IT leadership, IT strategy, digital transformation, but especially recently on sustainability, sustainable IT. So this includes both green IT, making better use of IT in green sort of ways, which hopefully we'll come to in a future session. But today, just going to talk a bit more about the sustainability side of things in terms of legislation, regulations for ESG, which is environmental, social and governmental reporting, also known as carbon reporting. So over to you, Chris.
Thanks. So I interestingly enough, it's something that I've seen popping up a lot, at least on LinkedIn anyway, in terms of new job roles and people announcing, or companies announcing, their first ever head of sustainability roles and stuff like that. So hopefully the timing is quite relevant, I guess. But so if I dive into some of the questions here that we've seen, and questions that I have myself, obviously not being an expert on sustainability, could you sort of just start off by explaining, what exactly is ESG reporting, and why is it becoming so important for charities and not-for-profits as they start to, as I said, appoint their first head of roles and things like that? So
yeah, it's certainly a rapidly changing, as I said, lots of new roles being defined, and in fact sustainability and ESG itself is still being defined. Things seem to change by the week. So but basically ESG reporting stands for environmental, social and governance. So the reporting part of it is effectively non-financial data used by investors, analysts and organisations to check a company's performance and impact in those three key areas. So breaking them down, the environmental, the E part of it, this looks at a company's impact on the environment, and this is what we hear mostly about, I think, when we hear about sustainability. So it's things like the carbon footprint, it's water usage, waste management, and any efforts to reduce pollution in general. We'll talk a bit more about the environmental aspect today. The social aspect, this is the S part of it, looks how a company treats employees, customers, suppliers and communities. So it's all how it interacts with other people. It includes things like workforce practices, EDI, which hopefully we've all been trained on one way or the other for employee diversity and inclusion, and things like product safety and community engagement as well. And then finally, governance. This more relates to companies' management structure, I suppose. So typically more involved at board level, involves things like board composition, shareholder rights, and making sure they have ethical business practices, which is, all part of sustainability. It's not right here and now. It's about sustainability for the future as well, to make sure the organisation is still here in 10 years, 20 years, 30 years time.
So I guess my question is, what's the, obviously besides the environmental piece, what's the impact of sustainability practices, for a charity or not for profit exactly?
Yeah, I guess in some ways it's similar to what the impact would be for commercial organisations, but as we all know, it's a little bit different in the kind of third sector, if you like, for that. So for a lot of organisations, it's compliance, and this is avoiding financial penalties, and this does apply to the third sector as well as to commercial organisations as well. So already sustainability reporting should be built into the company's annual reports, whether you're a charity or other type of not-for-profit or commercial company. And the ESG reporting requirements are growing as well. So, regulations are expanding, and this will impact more and more organisations over time. And also, a lot of these regulations are based on the size of the organisation, which I'll come back to in a sec. So even if you're not impacted now, there's a good chance that you probably will be in the next year or maybe the next 2 years, depending on the size of the organisation and the growth of your organisation as well. So, there are non-compliance risks such as financial fines, loss of reputation if you're not fined, and if you're relying on funding from certain areas, you may miss those opportunities as well for that funding if you don't comply with the rules. But even if it wasn't for compliance, you should be doing this anyway as voluntary reporting, because this will help you for future legislation. If legislation comes through in 2026, let's say, you'll probably need data from 2025 in order to fulfill those reports next year. So you need to start doing that right now.
And does this obviously another thing that I've seen is, and just saying on the reputation piece, it's that also impacts, and I think I've seen you advise a client on this before. It can affect the talent acquisition piece as well to a certain degree, as obviously the new workforce, the new generations that are coming up, they sort of have those sort of expectations of some organisations, especially a charity, I would imagine.
Indeed, and a lot of people who choose to work in the charity, the third sector in general, often have other motivations apart from just the financial piece of it. So if you want to attract that talent, and perhaps you don't have the financial means to pay top salaries, you probably won't be able to attract that talent in the future if you can't prove. And prove is the important thing. You're doing it is one thing. You need to be able to prove that you're doing it as well, and that's the social part of it to make sense as well. So, and it's not just talent attraction; it's also improving trust with the public, and with any other partners by demonstrating transparency in your sustainability, avoiding greenwashing, and the reporting signals your accountability, if you like, for what it is that you're doing with these reports. And finally, operational effects. We talk about operational efficiency all the time, don't we, in IT, and how IT can be used to make the organisation more efficient, reducing costs, hopefully improving profits in a commercial company as well. But a lot of sustainability moves can also have the same effect by reducing costs, which then frees up resources for more frontline services, if you like.
So I guess one of the key areas you mentioned earlier was regulations, which is always it's always a big word, I guess, across any industry, right? So around ESG and the carbon reporting, what is it that you would say that as a charitable or not-for-profit organisation you need to know?
Right at this moment in time, I'll discuss that. It's probably likely to change in the next couple of months, and then change again by the end of the year, because it's an ever evolving landscape. So there's UK regulations, there's EU regulations, which you might think we're not part of the EU anymore, but if you have any dealings with the EU, then there's a good chance that you may have to comply with those regulations as well. And then the US, obviously, since the new guy came on board in the US, things have changed quite a bit with their approach to sustainability. We don't know what the effect of that might be in a few months' time yet either. But as things stand today, there's a few key regulations that you should be aware of that do affect not-for-profits as well as commercial organisations. I'll run through a few of them here, not in any great detail, but you can obviously come back to us with requests for more information. So the two key ones really are what's called SECR and ESOS. So the SECR is the Streamlined Energy and Carbon Reporting, and this requires any large UK companies disclose their energy use, the carbon footprint, and the greenhouse gas emissions in the annual reports, which is what I referred to earlier. So this is governed by HM government. So check that if you're typically if you're over 250 employees or turning over more than about 35 million a year, this will affect you and apply to you. The second one is ESOS, which is the Energy Savings Opportunity Scheme. Again, a mandatory assessment of energy used by buildings. So housing sector in particular will be affected by this. So energy used by buildings, any industrial processes, and transportation. So, and the idea behind the identify cost-effective energy-saving measures. This is governed by the UK Environment Agency, and it has to be carried out every 4 years. So those are the two top ones really that probably affect a lot of people who are watching this this tea session today. A couple more to make you aware of, though, just on the horizon. CRFD, which is a climate-related financial disclosures. This basically is a list of 8 different things that organisations have to report on with regards to their climate-related risks and opportunities. And the big one that's been in the news the past week, which you may have heard of, is CSRD. So this is very much a hot topic in the last few days. CSRD is the Corporate Sustainability Reporting Directive. It's an EU regulation targeting primarily large companies. Now, legislation was supposed to be coming through this year, 2025, March this month. But there was a change last week. So the EU omnibus package, which was declared last week, has now reduced the scope of who has to report for CSRD. So again, that would have reduced by about 80% and put a date back to 2028 from 2025 as well. So if you are an organisation who deals a lot with the EU and you have been talking about CSRD, good news and bad news. The good news is obviously there's no so much urgency to do it right now. The bad news is for sustainability in general and for kind of for the globe, for the Earth. A 3-year delay is not what we want from a climate change prevention.
There's an awful lot of acronyms and sustainability.
Yeah,
I think it might be worth for some people to have almost have a cheat sheet, right, with what stands for what.
Yeah, I mean, it's a real alphabet soup, and I only noted 4 there. That there's about another dozen that affect UK organisations as well, which again, maybe that's a future session if there's enough demand for that sort of thing to go through it in a bit more detail. But that's to give you an idea really of kind of the widespread range of the regulations that are out there at the moment. But they do have one thing in common, and they all involve collecting more or less the same data. So the message from today that will come through hopefully is, as we progress through this, is that how to get started really is to start collecting that data, and perhaps we can talk a little bit more about that, Chris, as well.
Well, that might actually tie into the next sort of question that I had, which was obviously there's a lot of, there's several moving parts that you mentioned already, right, that are subject to change or have changed already. So how do you stay compliant when obviously the sustainability requirements, if you like, are evolving sort of in real time, right? So how do you stay compliant with that?
I think the first thing, as I mentioned, is start collecting that data. The best practice is very much around data collection, and there's a lot of debate in organisations around who should be doing this. So whether it sits with the finance function, because they traditionally do a lot of the reporting, data collection, reporting on financial stuff. But obviously, as I mentioned earlier, this is non-financial reporting for ESG. If you've got a dedicated sustainability team, they're probably going to be doing that and talking with their colleagues in the organisation. Or does it come down to IT? And there's a lot of benefits for IT doing this because they have access to all the data through the database systems, and probably a lot of other data strategy work that's going on at the moment in the current landscape. But with AI changes and everything else, there's a lot of companies now focusing on kind of trying to eliminate silos and such like with AI. But the key things really is with that data, you need to start collecting data about your greenhouse gas emissions. You need to measure, manage and report on your greenhouse gas emissions. So we've all heard about greenhouse gases and greenhouse gas emissions, but it is actually a very scientifically established protocol, greenhouse gas protocol, which has been around for a long time now. And this basically defines emissions as being direct emissions, indirect emissions, and value chain emissions. So all that sounds a bit esoteric at the moment, but effectively Direct is things that you emit yourself. Indirect is things that you purchase or that you sell on, which then emit emissions. And then these are then broken down into three scopes. And people talk about scope 1, scope 2, and scope 3 all the time, as if it was something very, very complicated. So it's not particularly. So scope 1 is your direct emissions. So if you own any company vehicles, if you've got boilers that kind of burn things off, anything which emits things that are owned by your company, that's scope 1. Most organizations have access to this information fairly easily because it's held in their systems somewhere. Scope 2 is indirect emissions for your company. Again, this typically is just electricity. So if you buy electricity, which I'm sure you do, as part of your operations, you're buying that from an organization who is emitting carbon themselves. So typically the way to get this information is just from electricity bills. And then scope 3 is more complicated. This is any other indirect emissions. So anything from your suppliers, your beneficiaries, your customers, anything that they supply to you, or anything that you sell on to them in the use of that product, whatever it is, and then at disposal of that product, whatever it is, that's the scope 3. And it's quite difficult to get hold of that information. And this is typically where organizations would reach out for specialist support in helping them gather that information. But the key message, so just the key message on that, Chris, we'll move on, is, as I mentioned earlier, the key to all this is early preparation. So even if you don't know what you're doing yet, even if you're not necessarily subject to all the regulations, start thinking about it and start preparing, start collecting the data, and that will help you avoid the penalties. It'll help you build trust with your stakeholders and stay ahead of any future mandates as well.
So when you you mentioned a key area, and I think that kind of sort of segues into what I was going to ask actually, which is, as you having your tea time, as you as an organisation, whether you're sort of reaching that cusp, whether it's the revenue bracket or employee bracket, as that you mentioned earlier on, what are the simple steps that, again, a charitable or not-for-profit organisation can sort of take to start their ESG reporting journey? And I know you mentioned sort of some key areas they can focus on, but it'd be good to sort of understand that in a little bit more detail.
Okay. I guess, I mean, I say don't try and do everything at once, as I alluded to earlier as well. So the golden nugget for me is starting small is okay. Focus on material aspects like energy use, employees, travel, emissions, etc. You don't need to be perfect to start with. Just start collecting that data and then build it up from there. That's number one. Number two, start building up internal expertise within the organisation if you have sufficient resources for that, or seek external support. So engage with third-party resources and use online tools as well, which we can help you with recommending some of those. Number three, once you start collecting that data, establish your baselines, because obviously you can't measure how much you're improving unless you've got those baselines in place. So start measuring your scope 1 and scope 2 emissions. So this is your direct emissions, what you're burning, and your electricity usage. You can get your current energy and carbon footprints using the greenhouse gas protocol. So there's a published set of tables which effectively converts whatever your miles you're traveling, whatever fuel you're burning, into actual carbon emissions, which you can then submit to the various reporting frameworks that I mentioned earlier in different formats. And again, it's quite complicated, but if you've got that core data, you can then report on that in different ways. And then only then expand to your scope 3 emissions. So this is a difficult bit, looking at procurement, looking at waste management, looking at staff and volunteer travel. And there's a lot of guidance in the greenhouse gas protocol manual about this, but it's a multi-100-page document, so don't underestimate what's involved in doing this. And again, if you don't have internal resource, reach out and seek help from whoever you'd like to get the help from. So
again, it does seem, it's for me at least, right, certainly the sort of uninitiated, if you like, in this sort of space, there's a lot of there is actually quite a lot of complexity in there. Sort of as you dig deeper and go further, areas like you mentioned, like scope 3, so on and so forth. But are there any tools or technologies that make sustainability reporting easier for the, say, uninitiated, if you like me, or those that are in the NFP or charity space, or anyone, in fact, right, that's interested in making their life a little bit easier with some of those
yeah,
tools
I
and tech?
mean, there's a combination of things you can do. I think working in the IT sector, if you like, there's we most of us are familiar with database tools and data collection and reporting. So I think IT leaders are very well positioned to drive sustainability in their organizations using technologies and data skills to drive compliance, establishing robust data capture and consolidation processes. So that's probably in place in most organizations anyway. It's just collecting and collating different types of data to what we had before. And then when it comes to reporting, we hopefully have the skills to be able to streamline a lot of that reporting as well, and maybe steal a march on other departments who may not have that particular skill in building reports. But also, I mentioned other departments, it's important to build that cross-departmental collaboration. So IT is one thing. You need to probably work with the finance team, fundraising teams, procurement teams, and if you have them, CSR, corporate social responsibility teams, to make sure we have data accuracy and alignment with whatever your organization's sustainability goals actually are. And I think this particularly comes into place for scope 3, which is, I think scope 1 and scope 2, the finance department can probably provide a lot of that information, or your procurement team. Scope 3 is more difficult because it does involve talking to a lot of external agencies, both suppliers and customers, and then being able to work with different systems, gather data from those different systems and collate it into something central for that. So typically we're looking for data collection, analysis, and visualization. We've got visualization, we've got cloud platforms. Microsoft Power BI is in use very much these days. Can use this to analyze and visualize those trends. We can use IoT devices to monitor energy use. So if you've got a large housing estate, for instance, we can use those devices to externally monitor a lot of that energy use, along with obviously any meters we have in place already. And then I think thirdly on this is, from an IT point of view, automation and integration. If we leave out the IT team, a lot of people will be doing this manually, collating the reports manually, but I think we have the skills in IT to actually automate a lot of that reporting processes, saving time and accuracy, and then integrate that with the greenhouse gas calculation tools to make it to make it a one-off task, really. So once you've done it, it's there for future years as well. It just pours into the report, if you like, from there. So I think the IT department's got a lot to play on this, and can also ease using tools and technologies. But there's also third-party tools and technologies. I mentioned the Greenhouse Gas Protocol. They have a set of recommendations. There's other companies out there, Greenly being one, who won a lot of accolades recently. They provide carbon reporting tools, but quite often these tools come at a cost. So they could be several multiples of tens of thousands. So we're looking at between 10 and 100,000 as to have a fully automated solution, whereas a lot of companies can't afford those types of costs, and they prefer to use their existing processes and people to maybe work with external consultants to actually ease that process and make it easier for them and the way that they work.
And I suppose when you look at any of those sort of solutions, it's an investment to some degree, right? The investment that you make in the system has to be able to offset the cost of anything else that's necessarily going wrong, or what it would cost you otherwise. But touching on the area that you mentioned, some organisations are looking to that don't involve IT and maybe trying to do it themselves. That the challenge there is it's going to take a lot of time and resource, and there's obviously a risk of inaccuracies and other areas. But on that point, what are some of the biggest challenges in sustainability reporting? How can you tackle them? I think obviously you sort of covered one of them there, and by making sure that they involve IT, but I'm sure there's other challenges that we're unaware of, given the complexity.
Yeah, I mean, within with previous work on this, we tend to categorize these challenges into three different types of it. There's technical challenges, organizational challenges, and legislative challenges. So I'll just touch on each of those. Technical, I've mentioned some of that so far. Data collection is the biggest challenge, especially for scope 3. Gathering all that accurate energy consumption and emissions data can be challenging, because maybe you have decentralized processes, you have legacy systems in place, or you'll just have incomplete records. You haven't got all the information that you need. So again, you can use IT tools and third parties to centralize and validate a lot of data collection. But also within technical, we've got qualification criteria. So how do you know which of the reporting frameworks apply to you? Which of the where do you have to submit it? And this could also be quite complicated depending on the size of your organization and your turnover, and size of number of employees as well. So typically, your qualification for these will depend on how many people you have working for you, what your turnover is, your balance sheet, and again, there are published criteria for these, but they do change over time. The second one is organizational. This is a bit less technical, obviously. So quite often it's hard to get people to buy into the idea. So even though, as you mentioned, Chris, there's investment costs, and hopefully with an investment you get payback in X years, however long it takes. But all companies have different challenges and a lot of other projects vying for that money to be invested in it. So it's quite hard to get the buy-in from trustees and even internal teams on the benefits of ESG. But you need to gain support, you need to coordinate between different departments. And even if you can get the stakeholder buy-in, do you have the people to actually make this happen? Do you have sufficient resources to prioritize ESG reporting, material metrics, and automating data collection? And even if you have the staff available, do they have the expertise to do what needs to be done, or would it actually be cheaper for you to perhaps work with third parties to at least get you on the way with the ESG reporting? And the final one, not to be forgotten, of course, is legislative. So the regulations, as I mentioned a few times, do keep changing all the time. You need to probably sign up to some newsletters that would make you aware of when those things actually change. And reporting deadlines can also change as well. So if you miss a deadline, this can result in financial penalties. So implement some project management tools, make sure you have not necessarily Gantt charts and such like, but something that helps you keep reporting on track and reduce any last minute stress, which we all want to avoid. And then for ESOS, which is the energy savings scheme I mentioned earlier in particular, you might need external expertise on this, and I don't mean IT or management consultancy, but it has to be verified by a qualified lead assessor. And given how many companies are going for this at the moment, it's very, very difficult to find a suitably qualified lead assessor to effectively audit what your numbers are. So I think there's both internal and external challenges in getting this going.
Okay, and so but you touched on resource. I can imagine that's going to be quite a big pain point for a lot of organisations in third sector, a lot of also smaller organisations in general, maybe. But how do you make it, with smaller or fewer resources? How do you still make a difference in that space? Really, how is that done?
I guess if you haven't got the internal resource, then the first thing to do is engage with external resources as well, not necessarily just consultancies and agencies, but other organisations similar to yourself who might be going through the same thing. Collaborate with those people, find out what they're doing, find out what tools they're using, and ideally someone with an IT technical background as well, so you can actually get the insight into how to use tools to help you make it more efficient in how you do the ESG reporting, and also perhaps what to avoid. There's a lot of I wouldn't call them snake oil salesmen out there, but it's a subject at the moment. So there are people who try to sell you something and perhaps scare you into doing something that you don't necessarily need to do. So work with someone who's a trusted and a valued partner to help you to do this. And then I think crucially, to get going, what do you need to do if you've got fewer resources? I guess first thing to do is identify which of those frameworks actually apply to you. It might be that you're small enough, none of them apply to you, so there's nothing that you need to do from a compliance point of view, but start reporting anyway, because it will hit you either next year or the year after. Step number 2, I guess, is, as I said before, calculate your scope 1, scope 2 figures. Just get your energy use, look at travel, look at procurement, and then start on your scope 3 data collection. So step 3 is your scope 3 data collection. You need to agree really what your business goals are. What is it you're trying to achieve with your reporting? Are you doing it for compliance with your partners? Maybe they won't work with you unless you're unless you've got sufficient accurate scope 3 data figures. It may be just a more kind of esoteric, wanting to be seen by your stakeholders, by your customers, to be doing something about this. So it's less measurable from a financial point of view. And then make sure, as I said before, make sure you consolidate and securely store your data. It's not just a one-off exercise. You'll need to be able to access past data in the future to make sure that you can prove that you are improving on your carbon emissions reporting.
I think that kind of talks to what you mentioned earlier as well, around starting early and starting small.
Yeah,
so you're almost making an investment in some of the work that you're going to be having to do later on, I suppose.
Indeed.
So I guess the next piece, you mentioned earlier stakeholders and things like that. It would be interesting to know how do charities or not-for-profits use ESG reporting to attract more donors or partners? As I know you mentioned, obviously, partners just a moment ago. How can that be used to attract those sort of characters or people in those areas?
Yeah, okay. I mean, away from the compliance, that's obviously away from the compliance side, which we mostly talked about today. But I think the key thing is establishing or enhancing your reputation, your organisation's reputation, which makes it more attractive to funders and to stakeholders. I read something a couple of weeks ago that said 75%, it's more in the charity sector, 75% of donors now consider charity sustainability practices before they contribute, and that is increasing over time as well. So that is a huge thing if you're in that space. And lots of funding bodies will now prioritise charities, organisations that demonstrate environmental and social responsibility. And again, this is something we expect to grow over the next few years. So get in there early.
So, sort of as we'll sort of wrap, bring this to a close. What would you say is, I guess, if you could give one piece of advice to leaders in the third sector that want to make a real impact to sustainability, what would that be?
I think it's probably come through by this point anyway, but I think the key message is don't delay, start now. If you don't yet have to file mandatory reports, you soon will. And you need to be collecting data through this year, through 2020-25, for your 2026 reporting compliance. And the rules may have changed by next year, that they say next year you have to be able to report on the previous year. So don't delay, start now. If you haven't got the expertise in-house, engage with someone to get started on your ESG reporting. And I'm sure we can advise you on suitable partners for that, or indeed anything to do with suitable tools as well to help you get on your way for that. Okay,
brilliant. Well, look, Dave, thank you so much for taking the time to go over this with us. I mean, I've certainly got some reading and learning to do myself at the back of that, starting with getting all these acronyms in order. But hopefully we this delivers some value to some of our viewers. And again, if anyone has any questions around sustainability, feel free to reach out to myself or David. Chances are, if you reach out to me, I'm going to put Dave in front of you anyway, right? Clearly, as he knows a hell of a lot more than I do. But yeah, so bring that to a close, the first of many. And again, thanks for your time, David. And we'll speak soon. Cheers. Thanks. Bye-bye.
Bye-bye.